I'm so delighted to continue the Financial Fitness Fridays. This is the second session, and we're going to have a lot of fabulous information as it relates to personal finance, growth and development, and realigning your life with your purpose. And fortunately or unfortunately, finance is going to be a big part of that. It comes into play at some point. So when you're trying to get your life in order, level up, fall into alignment, you're going to have to get your finance in order as well, if it's not already in order. I am still nursing some sniffles, a little sore throat, but we're going to get through this. So what I normally do is I give a quick recap of the last session before we go into today's session. And so that's what I'll do in a minute, but let me just do my pleasantries. Thank you all for joining me. Peace and blessings. This is Financial Fitness Fridays with D.E. Wilder, and I am D.E. Wilder, and I am living my life with power, with passion, with personal growth, and most of all, with purpose. And I'm hoping that everyone share those sentiments with me, that we all are living our lives with power, passion, personal growth, and most of all, with purpose. So in Financial Fitness Fridays, my last session was about financial fortitude. And that was a powerful session just to lay the foundation of where we all either should be or where we should be going to get ourselves financially founded, building up pillars. And I even have 5 pillars of financial fortitude and laying the groundwork, because if you are join my sessions, my hour of power, of purpose and praise, then you will know that my sessions build over time. Each session is building on top of the other session, and because that's part of growth. We're growing. So Financial Fitness Friday is no different. So let me give you a quick recap of financial fortitude. And it was a powerful session. In this world where there is so much instability, we feel the constant instability surrounding us in so many different ways. But that episode provided a clarity and courage and practical wisdom that is needed for us to rise financially, even when the ground beneath us feels unstable, unsteady, or shaken. I broke down the true meaning to financial fortitude. And at the fundamental basis, financial fortitude is grounded in the emotion, spiritual, and mental strength to remain grounded during financial storms. That episode empowered listeners to release fear and gain clarity and build habits that support your long-term financial goal and stability. The key topics that I covered was the true definition of financial fortitude. And that was just basically letting you know that you need the strength, and the strength that matters more than the size of your bank account. And that was the 4 pillars. 4 pillars. One was stabilizing your money mindset. You have to now have a certain mindset of financial control. Second one was building a cash flow command center. The third one, which is always my favorite, having a financial goal bag. If anyone knows, I have a financial goal bag plan, and I've had a entire session on that. If you have a chance, go to my YouTube channel, check it out. It's a popular session. The fourth was skills and strategies and income stream. Very important nowadays. The cost of living is rising to have multiple streams of income. And that's just great for your financial future in general, because you want to go from being employed, having a 9 to 5, to one day being an employer and having employees clock in 9 to 5. This is the road to getting there. It also focused on reducing financial fragility. That means building strength and not being so fragile that in storms and in times changing and shifting, your finance will change and shift with it. You got to have some type of stability. And that stability, that planning starts now. How to eliminate weak points in your money habits and in your environment. Becoming financially unshakable. That's where everyone should want to be getting to that point. Developing discipline, identity, resilience, and having peace around your finances. That was a powerful episode. And why do that episode have meaning, have so much meaning? Why does that episode matter? Because in certain times, you don't have to allow the unforeseen to break you. And unfortunately, there's so many people who are in a financial instability situation where uncertainties, things that come out of nowhere, will certainly break them, and will break them financially. We have to work on building up financial fortitude to prevent those things from happening. With the right mindset and the right plan, the right perspective, you can build the foundation that protects your present and prepares your financial future. Oh, like I said, that was a powerful session. It will be on my YouTube channel, and you can watch it in its entirety. It's going to be great, because that session was perfect for anyone seeking clarity and confidence, financial resilience, and a stronger relationship with their finance and their money. It was perfect for you. That session was for you. So if you get a chance, you certainly want to check out Financial Fortitude, Building Financial Fortitude session. Today's session is an equally thought-provoking, but it's a session where you can learn and grow. I don't want my Financial Fitness Fridays to be a stuffy financial information and stuff that makes people fear, because most people fear when you start talking about finance. And the reason they fear it is because they might either don't understand it, they might not have enough experience with it, they might not have enough finances and things like that. And people often fear what they don't understand. But I'm going to break it down to the terms where you can understand it. Because on a financial ladder, I've been up and down that ladder. so I can empathize and understand regardless of where you're at, high or low or in between. And I want to break it down so we all can identify where the message really finds you where you at and help you grow. So that's what it's all about. And today's session is going to be no different. Let's get into it. Today's session is about credit accountabilities and responsibilities. Building credit worthiness. Let me see you accomplish anything nowadays without a stable credit. Let me see you go to the next level and build an organization. Purchase something large or small. Get financial support without stable credit. Let me tell you, it's going to be extremely hard. It's going to be extremely hard. Credit is going to play a part in every aspect of your financial growth. So this is what we're talking about, and this is how I'm going to disseminate a lot of information that you can take, put into action. I have two prongs: a call to action and a call to focus. Both of them requires action, and it requires you to do something for yourself. So let's get into this because this is going to be a great session. So welcome back to Financial Fitness Friday with D.E. Wilder. I'm happy that you're joining me, family, friends, and fraternal souls. This is D.E. Wilder, and today we are stepping into a conversation that impacts every dream you hold, every door that you want to open, every level that you are ready to rise into. We're talking about credit accountabilities and responsibilities, not just a number on a report, but a financial reputation for yourself that you build so you can grow. The choice you make and the future you are preparing to walk into, or the future that you are designing. Today's session is not about fear or overcomplicating financial matters, as I mentioned. Too many people do that. It's not about shame. It's about power, strategy, self-respect. Because credit isn't just credit anymore. It's much more than that. It's your story of trustworthiness, your discipline, your financial character, your financial characteristics made visible for the world to see and the world to make decisions on by your credit worthiness. Nobody can build this story for you. It can only be built by you. So today we are breaking down all of the various aspects of this credit worthiness, building credit worthiness. And we're breaking it down with clarity, realness, and empowerment. So let's unpack this and let's go deeper. Understanding credit as a form of identity. Fraternal souls, let's start here. Credit is a mirror. It's a mirror that reflects how you manage your obligations, how you honor your commitments, how you consistently follow through on the things you're supposed to follow through to, how well you balance access with responsibilities. Your credit worthiness is a signal to lenders, landlord, car company, employers, sometimes even insurance companies. But more importantly, your credit worthiness is a signal to yourself about how aligned you are with your own financial discipline. So let's be real and let's name a truth. You cannot manifest a life of financial freedom without establishing a financial foundation and a financial foundation of responsibilities. Your dreams requires structure. Your aspirations requires stewardship. Your next level requires that you show up for your current responsibilities with honesty, sincerity, and maturity. Credit is not just a score, it's a reflection of your stability, intentionality, and consistency. And we're going to focus on consistency a little more down the road because that's a key part of building and maintaining, establishing strong credit worthiness. Very simple: consistency, accountability, honesty, and trust. All these things are one of the first bridges between where you are and where the life is that you want to build. And here is the real empowering part. Credit can be built, and that's a beautiful thing. Credit can be repaired. Credit can be strengthened. And this can happen at any age, at any stage, at any point, anytime, from now into the future. You can restore, you can grow, you can correct, and you can build. So here are the 5 pillars of credit worthiness. These are the things that will establish credit scores, and how lenders will look at you. One is credit history. And I'm going to break down the way it's focused and the percentages, and how it make up the value of your credit worthiness. Credit history represents 35% of a credit score. This is the heartbeat of your credit. So credit history means many things. It means longevity, how long you've had credit, how responsible you have been with credit, and what type of credit you have. It represents your reliability, things like, do you pay? What do you owe? Do you pay your bills on time? Do you pay your bills on time every time? Very important. This is the first signal that lenders look at. It probably represents the largest percentage of your credit score makeup. Missing a payment will damage your score. But consistent on-time payment will be the fastest way to build your score. Discipline can rebuild anything. The second is credit utilization. That represents 30% of your credit score. This is how much of your available credit you have and that you're using. If you have, for an example, $1,000 available credit, and you use $900 of that $1,000, you're telling the system that you're stretching yourself thin. So you want to stay within a 10% or 30%. And the 30% is where the meter starts to move. You know, anything below 30%, they're rating how good and great and fair your credit worthiness is. Once you pass the 30%, now that meter starts to move. And your credit worthiness will certainly start to go down, because that's saying to a lender that not only that we lend you money and you have access to it, but you need it. And unfortunately for lenders, anyone who needs it is a problem to lenders. They want people who are financially stable and people who know how to manage it, not necessarily need it. So stay within the 10% or 30% utilization range whenever and wherever possible. For me, I like to stay around the 10% range. That's always going to put you at the top of the credit range. It's not about having a lot of credit. It's not about that at all. It's about how do you manage the credit. It's about being responsible with what you have. That's how you're going to be judged. Third, the length of your credit history represents about 15% of your credit worthiness. The longer you have an account open, the better. The longer your credit history, the better. Credit is built through time and patience. So don't rush and do not close an account. You don't want to do that. You want to manage your account. You don't want to do that. Let the account stay open. Let it age, even if it's an account that you're not using often. Now, when I say not using often, do not close account. Let it age, but do not let it go dormant. So if you have an account, don't have an account where you're just not using at all and you never use, because some lenders may even just close the account because it's dormant. So you want to utilize it every once in a while. This is part of your management process, and keep that account active, but keep it open. Very important. 4 is one that most people don't even know about. That is credit mix. What is credit mix? Some people may think, well, I have a wallet full of credit cards, and my credit score is X, Y, and Z. And that might be all well and good. But to add another, like I say, saison to your credit worthiness is having a proper credit mix that shows an even greater credit worthiness. Credit mix means you may have the credit cards, but now you have a personal loan and installment loan that you manage well. That means paying all your bills on time. You have an auto loan. You may perhaps have a student loan. The student loan falls under that category or part of your credit mix. And the largest one that you can have is a mortgage. These things, and having a combination of these things, proves that you have a credit mix and really strengthens your credit worthiness of showing that different lenders at different levels find you worthy. You don't need everything, but having more than one type is very helpful. Very helpful. And it'll put you in a position where you can get even more access. And that's where you want to be. And new credit inquiries represents the 10% of your credit worthiness and your credit score. And so every time you apply for something, there's 2 types of pulls on your credit report. There's a hard pull and there's a soft pull. When you apply for something, that will represent a hard pull. A hard pull is when it's going to show up on your credit report that you are applying for something, and you just applied for, and this could be just applied. This doesn't even mean that you approved. Just applying for something will be a hard pull. Whereas a soft pull would be where someone can look at your credit report, glance at your credit report, without it showing up on your credit report. And you can have as many soft pulls as possible, and it'll never show up on your credit report, although a hard pull will. Too many hard pulls sends a bad signal to creditors. That means that you are looking for something, or you're applying for too many things, or that you're not managing your finance well and you're not making the right decision. There is a strategy to applying to things, and that will be in future credit sessions. But there's a strategy of when, how to apply, how to group your application in one period of time, where now those hard pulls and or soft pulls are happening in a group and having less of an impact than when you're doing it sporadically all over the place. That sends a bad signal to creditors. So by me saying all of that, it means that you got to manage the finance and you have to be intentional. And that's very important. That's what it's all about. So when you're applying for something, apply with purpose. Have to. Oh, we're getting into this. Accountability. Let's start right there. The mindset of credit mastery. A lot of people are scared of credit. You know what? A lot of people are afraid to check their credit report. They don't even want to see what their credit report say, because the truth is your credit report is going to tell you your financial history. It's going to tell you what you did, what you didn't do, what you paid, what you didn't pay, who you owe, who you don't owe. It's going to say a lot. But if you want to get your finance in order, you want to grow, you're going to have to look at it. You're going to have to look it right in the eye. You're going to have to give it its due and look it right in the eye and start from there. So you want to get to the point where we are in the mindset of developing credit mastery. Let's talk about accountability, not in a punishing way or a blame shaming way, but in a self-respecting way, where we all feel that, okay, we can face this, let's be honest about it, and let's grow. Excuse me. Let's have financial self-honesty. You cannot build what you pretend does not exist. If your bills are backing up, very simple, be honest about it. Face it. If your spending is emotional, be honest about it. Face it. If your pattern are repeating, financial patterns are repeating themselves, be honest. Accept it. Face it. If you have self-destructive financial habits, just be honest with yourself and face it, because honesty is the gateway to repairing and developing and growing. You have to face it, because living within that truth and not living within an illusion. Credit troubles often come from a lifestyle of inflation, trying to live accordingly to someone else's expectations, trying to keep up with certain images or reputation, appearances, or sometimes pressure. You don't owe anyone any illusion of success. Let me repeat that. You don't owe anyone the illusion of success. You owe yourself the reality of stability and discipline. That's what you owe yourself. Let's go there. Discipline as a daily decision in your financial development. Oh, this is good. Let me double check to see if we got any let's see what here. Describe how irresponsible credit behavior in early adulthood, age 18 to 23, can influence? That's a great question. Can influence I guess your financial milestone? Oh, that's a great question. That's a great question. And that's a very important question. Let me go have a little sidebar on that because that's a great question. Because talk about credit worthiness, building, mortgages, car loan, credit cards, and all of this. But what about somebody who's just starting out their life? Let me make this personal, because when I first started out my life in business, I started in the financial industry. Started out in banking, some of the largest banks. And the very first thing they'll start to do once you're an employee for a certain amount of time is they'll start to give you finance. They'll start to give you credit cards, and if you want a loan, and if you want, and all of that stuff happened to me early on before I was age 25. I was rolling. But I was rolling so much I was spending like crazy. I was sitting in five-star restaurants for lunch. I come up in the days of the Wall Street era, the power lunches era. And I was trying to play hard. I was trying to be all that. And I made a lot of financial mishaps. And to answer that question is that when you start to make financial mishaps at an early age, the age of the question was from 18 to 23, you'll spend the next decade or more trying to fix it. Right there, that age, 18 to 23, is where you can build a financial foundation that will carry you through life. I mean, truth be told, if you got a decent job with a moderate salary at the age of 23 to 25, you can literally walk into the bank and get a mortgage and get yourself a starter home or a condominium or something. If you did that at that age and you paid your mortgage, paid your bills on time, your credit worthiness will shoot through the roof before the age of 30. My God, like at the age of 18 to 23, or let's go further, 18 to 25, from when you turn the age of adulthood to 25, you can do a lot of things that can set yourself up for the future and beyond. But you also can do a lot of things that will damage your credit worthiness, and you'll be spending years trying to correct. Because you got to remember, all negativity that hit your credit report can and will sit on it for at least 7 years. So let's say at 18, you have some negativity that hit your credit report early. For 7 years, it's going to sit on there. 23, for 7 years, you just do the math. So this is a very important age where you need to really start listening. If you don't have anyone in your life, unfortunately, God honest truth is I didn't have someone sophisticated enough at that age that I could talk to about funding and finance that would have gave me all the information I needed at that time to make the right decisions. I can honestly say that. I'll also say I probably didn't seek it out enough, because I could have found someone, but I didn't have someone that I trust full access to, that could provided me with that information. So I'm telling anyone at that age, seek it out. Find someone who is financially stable, who knows what they're talking about. You could even go into a bank and talking to a banker and get the information so you don't make those mistakes early on, because if you do, you will spend years trying to correct those mistakes? That was a fantastic question. I really appreciate that question. Let's move on, because that's a perfect segue into the discipline, the daily discipline, and financial decisions, and what's the importance of that. Credit is not built by dramatic gestures, but it is built by consistent responsibilities and being responsible and having responsible habits in time and over time. One, what? Paying bills on time. And let me tell you something. That is one of the most important components of credit worthiness, is paying on time. Having, when they pull that report, 100% on time payment. Anything less than 100% is unacceptable. It's a problem for a creditor. 100% on time payment. Make sure you pay on time. Keep balances low. Check your report often. Now there's so many apps that you can have at your disposal. In fact, all of the banks now have where you can get your free credit report, and you can have it in the app, so you can pull it as much time as you want, and you can look at it as much time as you want. They update it most likely monthly. If you apply to one of the credit bureaus, they update the credit score and the information daily. And so you can check it as often as you need to check it, or you want to check it, to your heart's content. Challenging errors on your report. So this is why it's important to review it. So if you see something that is incorrect, when I say something that's incorrect, it could be something that account that is not yours. That's a big deal. You address that and dispute that immediately. But it can be something minor, like a home address that is incorrect. When a creditor sees on a report that you've lived at 10 different places, you kind of judge by that. So make sure that those home addresses are correct. And if something is incorrect, correct it. Make sure that you see anything that's incorrect or inconsistent on your report. You have the right to correct it and make the correction to that report, so your report is properly accurate and reflect your credit worthiness. Also, setting reminders on what you need to do and what you need to pay and what you need to be responsible for. There's an old saying, more money, more problems. And that's a fact. Everybody want to be rich. Everybody want to be a multi-millionaire. Now we live in the world of multi-billionaires. Everybody want to have access to that finance. But what they don't know is the more money you have, I won't say the more problems you have, because, fun can solve problems, but the more responsibilities you have. This is why it's important to set reminders on what needs to be paid, when it needs to be paid, what your financial obligations are, so you will not forget. Because trust me, the more you have, the more you're responsible for, it is very easy to forget. And there is so many programs out there. You can have a program or app and stuff like that, and all that stuff will keep you in financial control. You need to get that and start that early, because that's always a good habit. Never, and when I say never ever ignore a debt. And that's for one simple reason, because that debt is not going anywhere. We live in a world where the people who hold the debt sells the debt and transfers the debt. So once they charge it off and write it off, they may get it off their financial books, but then they take that debt and they sell it to somebody else. And then that person will try to collect on it. And if they can't, they take it and sell it to somebody else. So what does that mean? That means that debt is never going away. It's never going away. So if you ignore it, all you're doing is kicking the can down the road. It's not going anywhere. You're going to have to deal with it. Deal with it sooner than later. Discipline is not punishment. Very simply put, it's protection. Deal with it. Your responsibility as a borrower, this is very important because you need to know, all the nuances of, being a borrower, whether it's a credit card, whether it's something like a store credit card, whether it's a auto loan, whether it's a mortgage, personal loan. More importantly, and this is where a lot of people got screwed up. For a long time, I was smart enough. When I was in school, I was paying for my semester by semester. I did I did a calculation of per credit, the cost per credit. I was paying per credit, all trying to avoid taking out student loans. And I did that for a long time, for most of my schooling, till later on. Because most people don't understand their responsibility as a student and taking out student loans. And that's going to come back to bite you when you don't understand it. When you don't understand your responsibilities, you don't understand the interest rate. You don't understand when it's going to kick in. You don't understand how long you have to pay for, and how you don't understand all of the ebbs and flows and the nuances of it. It's going to come back and kick you. So understand your responsibilities as a borrower. Understand your terms and the conditions of every single loan that you take out. Understand the interest rate. Understand the minimum payment. Understand your due date. Understand your penalties. Understand the fees. Understand the grace period. Each thing has something. I'll break this stuff down in a later session because it's really intricate. And there's a strategy to it all. It really is. But this is unfortunately not the time of the hour. But we're going to get into this in a deeper details at a later session. Let's keep moving. Because the fact of the matter is you can't follow rules you don't understand. Fraternal souls, that's just a fact of the matter. You got to understand the rules of the game, or the game is going to beat you every time. That's just a fact. But if you get into a situation that you don't want to be in, and it can happen to any of us, best thing to do is to deal with it head on and communicate with the lender. Fact of the matter, life happens. Unexpected events happen. Emergencies happens. If you are falling behind on something, or you even can look ahead and see a situation arising that you may fall behind, contact your lenders. They have programs and they have things that they can offer you. They can offer you, this is how much your balance is, and this is how much your minimum payment is, but they may have further payment plans that could break it down even further. And sometimes people need that relief. So contact your lenders and even your utility companies as soon as possible so you can start working out something with them. You can ask for a hardship program. Most offer that. Ask for an extension. Ask for a modification. You may need to change the amount that you need to pay, or you may need to change the date that you need to pay it on. Things like that. But that could only happen if you communicate and contact them. There's a saying, closed mouth. They also say closed mouths don't get fed, but they also say closed mouths don't get assistance. So you have to speak up. You have to contact. My advice is do that early. Do that early before it becomes a problem, because once it becomes a problem, it's hard to get control of. Here's something in our information age that is really something that you got to be vigilant on, and that is protecting your information. We are in the information age where identity theft runs rampant, and identity theft destroys credit. So be cautious. Be cautious with sharing devices. Be cautious with using public Wi-Fi. Be cautious with unrecognizable emails. Unrecognizable emails or text messages online forms that you're not familiar with, or you don't know where it's coming from, or you don't know fully understand what it's about. And phishing scam. Oh, those scams run rampant, and unfortunately those scams are really taking a toll on the young people and our elders who may not know any better and may not be as sophisticated as they need to be, and they fall victim of these scammers out here. So you have to protect yourself. You have to protect your name, protect your identity, protect your credit worthiness, protect your credit. So we had a question about thoughts on debt consolidation, and my quick answer to that is that is part of credit mastery. My thought on it is an essential tool. That's part of credit mastery. But here is the kicker. The kicker is to know when to do it. So some people just think that, oh, I'm getting behind, let me consolidate. You gotta be very strategic when and where you do it, how you do it, and what is your next step after you do it. Do you know the percentage of individuals who do debt consolidation only to fall back even deeper in debt? Let me just give you an example. Let's say you have a $5,000 balance on your, let's go more, $10,000 balance on a couple of your credit cards. You do a debt consolidation loan. Let's say you were smart enough to take out even more. So you got $10,000 on balances. You take a $12,000 debt consolidation loan. You take 10 of the 12 and you pay off your credit cards. Now you consolidating all that debt into one payment in an installment loan. $2,000 left over, you could put into an interest-bearing account, and now that can be a cushion for your payments for that loan. In addition to, it can be growing interest. All that sound great, right? That's the benefit of debt consolidation. But do you know what most people do after that? Those credit cards that are now zero balance, they start charging them back up again. So now they paid off $10,000 worth of credit card debt. Now they charge up $5,000 in credit card debt again. And now they got that debt consolidation loan. Now you're back underwater. Going back to credit mastery, you got to know when to do it, how to do it, and be disciplined when doing it. So now you're actually growing and you're managing that debt, because that debt can gobble you up anytime if you don't manage it and you're not disciplined. That's why discipline and consistency is a part of the credit mastery. Moving on. Credit monitoring. As I mentioned before, looking at your credit report, the 3 credit agencies that for personal credit is Equifax, Experian, and TransUnion. Each one offers a yearly credit report where you can pull your full credit report. If you sign up, and you can sign up for I'm not sure if all of them are free, but I know Experian is free, and you can sign up for Experian for free, and you can get your credit report at any time once you sign up with them, and you can have also the credit monitoring, so you'll see anytime something is changing on your credit report, and you'll get a notice. I encourage each and every person to do that. That's very important on staying on top of it, because you're reviewing it for, as we mentioned before, for errors, and you want to get on top of those errors early, but even more importantly, for fraud. Okay, you get some type of fraud on your account, and somebody open up an account in your name, and that thing sat there for a year, 2 years. It's gonna be hard for you to justify that fraud, for you to convince somebody that was fraud, and to fix that fraud, the longer it sits there. If something that was on your report for 2 days and you jumped on it and disputed it, that's one thing, because it can be reversed quickly. Something that's been sitting there for time is going to be harder to do. So you got to be on top of it. And that's why it's important to have the credit monitoring. Check out and look for duplicate accounts. As I mentioned before, incorrect address. People take that for granted, but that's very important. And incorrect balances. Now incorrect balances is kind of, iffy, because most credit companies do not report at the same time. Some report promptly, others take longer to report. So if you looked at it at some point, you could say, wait, I paid that down. It doesn't mean that it's incorrect. It just means that your credit company did not update the report yet. So, sometimes you got to be patient with that. Okay. You cannot manage what you do not monitor. You're not monitoring it. How you going to manage it? So we covered a lot, but it's a lot more to cover. Let's see. Any more questions out there? This is good. This is good. I hope this is helpful to someone. I hope so. So, building credit from scratch, and this is for the D, who had the question for 18 and 25. Building credit from scratch or rebuilding credit, and what are some of the processes and things that I suggest you do in building and starting with growing and development of your credit worthiness. Whether you're starting out, whether you're starting over, here is how you build. Here's how you rise. Always start with a secure credit card. A secure credit card is a credit card that is backed by a bank account. So basically the process would be you make a deposit in a bank account, and that deposit, the bank will give you a credit card as the deposit is collateral, and your available credit would equal the amount of what you have in your bank account. So for an example, if you deposit $500, then your credit card will have a $500 availability. You can't spend more money than you have in that account. But so that's where the secure part begins, and that's where the secure part really ends. It's backed by that bank account. Now that credit card itself, every aspect of it besides that functions as a regular credit card. So it shows up, well, on your credit report, it can say, not in all cases, but it can say it's a secure credit card. But it functions as a normal credit card. You have your credit score. It affects your credit score, your credit worthiness, and all those things but what it does is it builds your credit. So that secure credit card, paying that bill, utilizing it, having a healthy use of it, and paying it on time builds and strengthens your credit score. And over time, your credit worthiness grows, and you'll go from having secure credit cards to unsecured credit card. A normal credit card is considered an unsecured credit card. Getting the sniffles, so excuse me. Secure credit card, as I mentioned, is a deposit-backed credit card. It is used if you use it responsibly and keep the utilization rate low, as I mentioned before. Pay your balances. I always say, and this is the best way to control a credit card, is to pay it off as you use it. So you have in your mind, even if you have your availability of $5,000, each time I get to $500, I'm going to pay off that whole $500. Each time it gets to this point, I'm going to pay it off. I'm not going to charge up $500 and then pay $50, $100. No, pay it down, because that type of utilization and payment is going to shoot your credit score up. That's going to show a different type of credit utilization than the way most people do who's paying minimum balances. Credit builder loans. This is for the sophisticated ones. A credit builder loan is a loan where you're actually loaning it to yourself. You're putting money into a locked account, similar to a secure credit card, but this is a loan. You put money into a locked account, and then you, for all intents and purpose, on your credit report, it seems like it's a loan for that amount, and you pay that loan back, although that loan is secured by the money that you put there. But it will come up on your credit report as a loan, and an installment loan, and it would affect that way. It would be a positive effect where if you're paying it on time, your credit score is growing. So that's also a perfect way to build your credit score. But at the same time, it's for the sophisticated. You need to know what you're doing. You need to know what you're doing and why you're doing. This is something, again, that you're doing with purpose. Authorized user strategy. This is most likely for young people that parents may put them on to a credit card as an authorized user. You join someone with excellent credit if they trust you. Most likely, the only ones who's going to trust you is your parents or maybe a spouse. And they will put you on. And once they do, their credit history and their on-time payment, all those things positively affect your credit report and your credit score. Give me 1 minute, excuse me. I'm sorry. Yeah, so it positively affect your credit score. So now, if someone is that nice and generous to do that, that's a beautiful way to build your credit score. But here's the flip side of that. Hold on for 1 second, please. But here's the flip side of that. Here's the flip side of that. If you are on and you're authorized user and you're on someone's credit card and you're using it, just like their good credit history and all that can affect you positively, your misuse of that account can affect them negatively. So now let's see who you can find that is going to be willing to jeopardize that. Good luck with that. Moving on. You could also now, and I wouldn't necessarily recommend this. This is something that if someone is really trying to build their credit history and stuff like that, but don't have a lot of credit out there, they can add their rent and utilities to their credit report. Your on-time payment, or this says it, not even on-time payment, because it goes both ways. Your payment of rent and utilities can be on your credit report, and it can have a positive effect, being as on time, and that's great. But as I mentioned before, life happens. Life happens. You could be displaced with your job and anything. And so now, if you happen to get into that situation where you need to call your lenders or call the utilities and make payment arrangement, all that stuff, well, that's going to negatively affect your credit report. So that would be a last resort. I wouldn't recommend to anybody to add your rent and utilities to your credit report unless you absolutely had to, which chances are you don't. So, no. Last but not least, what is that? Eliminating collection strategy. We're going to save this one for another session because this one we have to unpack a lot. There's a lot of nuances and legalities in the collection realm. So let's just say we are talking about credit worthiness and building credit, and we're not in a point where you're in debt, you're over your head, and you're in collections. That's for another session. We'll definitely do another session on that. So I want you guys to remember this. Your worth is not your score. This is very important because this world will try to make you think that it is. Your worth is not your score. So hear me clearly, my family, my friends, and fraternal soul. You are not your credit score. You are not your past mistakes. You are not your financial mishaps. You are not your moments where you were in survival mode. Your score is not your soul. Your report is not your self-identity. It's not who you are. Credit is simply a tool. It's not a definition. Your worth is infinite. Your value is internal. Your potential is unstoppable. You can do and you can be anything. And your discipline and consistency can rebuild anything. So remember that. Don't let, because your score and you're having a challenge and you're starting out or you made some mistakes, that does not define you. You can always change and always grow. So here's a call to action. What I want you to do after this session is, and this is where we're going to start, because this is how you got to start from somewhere and build. Pull the full free credit report. If you haven't done that in a while, as I mentioned, there's a lot of people who are scared to see their credit report. Bite the bullet. Pull the full free credit report and review it. Look it in the eye. Own up to what you need to fix. Once you identify, these are the things that I need to fix, own up to it. Decide who you want to become financially and take action on that. And you can start that action today. Take action on that. Let's see, any more questions? I had some great questions today. Oh, we got one. Let's say, name one strategy for safely increasing your credit limit and explain why it helps your score. So that's a great question. This D, you got some great questions, D. All right. So, one strategy. The number one strategy in increasing credit limits is being responsible. Fact of the matter is, if you pay your bills on time and you're responsible with your credit, you have low utilization rate over a period of time, and not a long period of time, but over a matter of months and years, your credit lender will increase your credit limit. And there's two ways that can happen. It can happen where they just will increase it periodically, or it can happen where you will request it. Some credit lenders have it where if you request credit limit increase, they can do it as a soft pull, not a hard pull. And they'll take a look at your credit report as a soft pull. And if they deem that you are worthy of it, they'll increase your limit. Some of them may consider it, depends on which one, may consider it a hard pull. And, again, if they consider your worthiness, they will increase it. So that's one way, just paying it on time and having a relationship with that financial institution, you'll get a credit limit increase. Second part of your question was, explain how it helps you score. Now, this is the kicker. This is the most important part. As your overall credit limit, that means your available credit increases. So let's say you have a credit card and you have $2,000 on it, and you've been paying your bills on time, and in 6 months down the road, 7 months down the road, your credit lender increases it from $2,000 to $5,000. You're paying your bills on time, and you're managing that $2,000. So maybe you're using maybe $500. your overall credit availability increases. That means automatically your utilization rate decreases. So your utilization rate goes from, say, 15, 20% down to 10 or 5%. That right now automatically pushes up your credit score. So the more available credit you have, the less you use it, the more your credit score goes up. So that's a great question. Another great question from D. So your future deserves your responsibility. Your dreams deserve your discipline. Your next level deserves your accountability. This is not about fear, but this is actually about financial freedom. Credit is not your enemy. Credit is the bridge. Use it wisely, manage it faithfully, and watch your life rise. Minute by minute, day by day, month by month, level by level. It can happen. You have to manage it correctly. Oh, this was a good session. And that's only part one. Let's take some questions. This session was good. Do you offer personal credit counseling? Oh, that's D. Oh, I like this guy. I like D. Because in fact, I do. What I do is I offer, and this is very important because you'll find people who offer credit counseling, credit building, credit repair, financial counseling. If you want financial advice, you have to go to an investment or financial advisor who has to be licensed. In my financial days, many years ago, many moons ago, I was a licensed one. But right now, what I'm offering is accountability coaching, and this is what they don't do. They may give you the tools to correct your credit and to help your finances, but they don't give you the tools to be accountable and responsible. That's what I do. I help people build plans to keep them on plan, to keep them accountable and responsible to get these things done. So, yes, I do offer that. If it's not in my bio, let me double check. If it's not in my bio, it will be soon. But if not, you can DM me, you can send me a message personally, and we can go from there. And it's a absolutely free consultation. So that never hurts. But that's a great question. Thank you, D. I appreciate that question. Let's see. Any more questions? Your thought on debt consolidation. We did that. Where we at? 11. It's Friday night. I don't know if anybody got to go. Anybody got any place they need to be? Because if you don't, we can get into part two. If not, we could save it to another day. Let me see what the comments say. Should we do part two, or should we save it for another day? I'm having fun. I like this. I should have started the Financial Fitness Friday sooner, because I think that this is so important and that this is going to be impactful on people's lives. What should we do? What does the comments say? Mr. David, but thank you, David, for coming in. Even if you came in for a minute, appreciate you. I appreciate each and every individual come in, and I hope that this information may be helpful. I haven't seen any comments yet, but let me just keep this going. So, part two of credit accountabilities and responsibility. Now we're on to the next level. This is the rise of financial character and sustainable credit worthiness. Now, we talked about in the first part of getting it and getting there. Now, this is more important. How do you keep it and how does it grow? Anyone can get it. I always say that about wealth. Anyone can get it. The challenge is, can you keep it? Okay, so let's dive deeper into the conversation that has the power to shift your financial identity from the very beginning and or survival mode to financial sovereignty. In part one, I laid the foundation for how to establish credit worthiness. And part two is about transformation. Today, we're going to step into the mindset that is required to sustain credit worthiness for the long term. Because building credit is one thing, but protecting it, maintaining it, and living aligned with it requires intentional, holistic stewardship. So let us unpack this and let us rise together with this. Let's get into this. Financial character, the person behind the score. Your score is simply just a number, but your financial character is your lifestyle. Credit worthiness is really about something very simple: responsibilities, consistencies, stabilities, maturity, integrity. All of those things are the characteristics on having credit worthiness. This is why some people's score rises even when they have modest income. I've seen people with very modest income having, almost 800 score based on their responsibility and consistency in handling their credit, while others struggle despite having high income. It's not about what you make, it's about how you manage what you have. Your financial character has three layers. One is your mindset. Are you emotionally driven or strategically driven in your spending and in your spending habits? Do you buy to impress or do you invest to progress? It's going to make all the difference. Your habits. Do you track? Do you plan? Do you prepare? That's going to be all the questions that you have to ask about yourself and your finance. Do you have a system in place? Do you automate? Do you have an automated system? As I mentioned before, there's so many apps and programs you can buy where you can keep a journal and a log of everything you buy, everything you spend, how much, what your balance is, and all that. You got to keep it all in order. It's very important because it can go out of whack. Very simple. Do you set reminders when you have to do something? Do you review it regularly? Do you update your information? Your mindset, your habit, and your system are the trinity of credit worthiness. If they rise, your score rises. If they fall, your score falls with it. Emotional side of credit. What does that mean for eternal soul? Most credit damage happens. Most credit damages happens emotionally, not logically. There's emotion, what they call emotional spending. What does emotional spending sound like? Let's get into it. Some people get a kick out of this one. Emotional spending sound like, I deserve this, therefore you're entitled, right? I've been stressed, so therefore I'm going shopping. That's what that means. I'll figure it out later. Therefore, you're saying, I don't really care. It's only a small payment. Therefore, you're making excuses. I need something to feel better. Therefore, you need therapy. All those things are excuses that are from the emotion, and you're not being strategic about it, so you're not going to get to the place of credit mastery. Simply not. Credit healing begins with emotional regulation, because credit is not just a number. It's a reflection of what you use to soothe, to escape, or to validate yourself. You have to have control. Emotional patterns that hurt your credit. Very simple. They call it stress spending. What's that called? Retail therapy. Stress spending, when life is feeling overwhelming and you spend the comfort instead of stabilizing. Comparison spending, trying to match your lifestyle with other people's lifestyle, especially strangers or social media or so on and so forth. Let me tell you, those people don't care nothing about you. Half of them, the stuff that you see is not even real. So don't do that. Escapism spending. What is that? Someone who wants to escape and always get away and always travel, because really what they're doing is trying to emotionally avoid something. So they do it by buying an experience or buying an item or buying something that provides a temporary fix or a temporary relief. To build strong credit, very simple. You must first build a strong internal foundation and be intentional about it. Financial boundaries, protecting your name, as we mentioned, to getting your credit report and watching out for the fraud. People don't talk about this enough. Your name is your asset. Your social security number is your legacy. Your identity is your responsibility. Financial boundaries is protection. And you need to protect your finances, but also set financial boundaries. What would that look like? If you set in financial boundaries, you are protecting your credit, you are protecting your future, you are protecting your reputation. Very important. This is a kicker. We'll get into this a little deeper in a later session, but do not, and this is if you have stable credit or AAA credit, do not ever co-sign anything. Do not. Fraternal souls, please listen to me. Do not co-sign anything. When you co-sign, it's like you giving someone else the key to your financial identity. Co-signing something has broken more relationships, has destroyed many credits, and has delayed so many people's destinies over time. Unless you are fully prepared to take over the entire debt that you're co-signing, do not co-sign. That's just a word to the wise. Protect your accounts. Set up alert two factors, authentications, identity monitoring, password protection, freezing your account anytime if it's necessary. These are the things you need to do to protect yourself. Your credit can't grow if it's being attacked constantly. You got to put yourself in a position where you can protect all of your assets. Don't lend more than you stand to lose. Friendship break faster over money than even over betrayal. If you lend what you can afford. And when they say lend what you can afford, the truth is lend what you can afford to not get back. Protect your credit, protect your relationship, and in essence, protect your peace. Strategic credit behavior. Let's move deeper into real actionable strategy. This is what we call the call to action. This is for sophisticated people. So we're not even going to get into this one. We're going to skip past this because there's a strategy of paying your bills twice. Twice as nice, speeding up things, even with your mortgages. But that's another thing. We're going to get past this because we did great today. So let's stay with the mindset of financial maturity. Financial maturity is when life shifts from, and this is how you'll know when you get into the financial mature stage. When life shifts from, I can't afford that payment, to, I can't afford to not make that payment. That's one shift. When I want it now, to, I want stability at all times, having control. The thought is, this won't hurt if I do that, to, this will follow me over time, and it's not the best thing to do. Credit worthiness is the adult version of financial self-respect. Let's name that truth. Financial maturity is not about perfection. Oh, so much. It's about direction. Your effort today shapes the access you're going to have tomorrow. So be responsible. The rise, we're rising, we're living credit worthy every day. Credit worthiness becomes effortless when it becomes a way of life. It becomes your lifestyle. So therefore, you want to live with intention, awareness, restraint, planning, structure, honesty, responsibility. Oh, your credit score will follow you and follow your character. So you got to understand it's not the other way around. When you become a better steward, your score becomes a better reflection of you and your credit worthiness. So here is your empowerment call to action, my fraternal family. You are not a victim of your past mishaps. You are not. You are not defined by your financial mistakes. You are not stuck, broken, nor are you limited. You are evolving. You are becoming. You are rising. And today you made a grand decision to build your credit with integrity, to manage your finances with maturity, to protect your identity with vigilance, to honor your financial journey with wisdom. That's what we're doing with intention. Your credit score does not measure your worth, but it will it will measure your readiness. It will. So walk with power, walk with purpose, walk with discipline, because if you are building a financial future, you want to build one that reflects who you truly are. Who are you? You are responsible, intentional, accountable, worthy. And after this session, you are on the right path. You are stepping into the next level of your strength, clarity, and financial sovereignty. This is Financial Fitness Friday with D.E. Wilder, and you are building something importantly powerful. So until next time, rise in power, rise in purpose, and rise in your financial truth. Please have a beautiful weekend. Peace and blessings. I hope this was helpful to someone. And for anyone who stayed with this session, thank you very much. Have a good weekend.
Whew, that was a lot.
I was